to the small stocks.
Okay, and from stocks to commodities, it is a commodity comeback, at least today. So oil pricing rebounding from a 5-year low. Okay, the 5-year low was, what, $62 when I was $63.75 early this morning. Bounced back, but gold, silver, and copper all had a nice move too, rallying more than 2%. Have commodities finally hit the bottom? Let's bring in our all-star panel. We've got Fox Business's Adam Shapiro, Wall Street Journal special writer Gregory Zuckerman, and Eagle Bay Capital founder J.C. Parets. Greg Zuckerman, right off the bat, when I started to see this move in oil, I thought, wow, but then you looked at gold up $35. What's going on? Is that the end of the big fall in commodities?
You know, it's hard to tell with these things, but it feels like a kind of a dead cat rally when it comes to gold and silver. I mean, OPEC and the Saudis have declared war on the frackers, so we're going to have lower energy prices. That's going to keep inflation down. Do you want to be buying gold and silver with low inflation? I'm not sure.
Well, are you sure, JC? I mean, you simply look at the charts here.
Yeah, and I think that you got to take it on a case-by-case basis. I mean, if you look at commodities as a group, the CRB index, it's not necessarily something that I would be short at this point, but I agree with him. Any rallies that we're going to get, I think are going to be corrective in nature. I think they're going to be counter-trend.
Any commodity you like right now?
Well, if you talk about silver, remember, Liz, you and I, we've come here on the show time and time again talking about silver. You know, I've been saying that silver prices...
$14, and I said, would you buy here? And you said no. Now it's $16.
I said, we'll cross that bridge when we get to it. We got below the $15 level that we wanted. Now, at this point, let's remember, we're still in a structural bear market in metals. That has not changed. So I think that, yeah, sure, we're probably going to get a nice rally, nice outside day across the board, but I think that's just going to be counter trend. And when you talk about the metals, palladium specifically, you and I, we talk about it time and time again on a relative basis. Palladium continues to outperform, hit new highs, new 52-week highs relative to silver last week.
It was the one that was down today.
Well, that's fine, because remember, the worst names are the ones that bounce the most, but that comes within the context of a bigger bear market.
Anything here that you say is weird, or you believe that maybe we've hit the bottom in commodities?
No, we haven't hit the bottom. I'm going to show you something that was in today's Financial Times. I don't know if you can see it on screen, but right here it's about China. Fear of a deflationary spiral in China. Global economy slowing down. Oil is going to keep going down, Liz.
Yeah, and watch out iron ore, because that's the China play, right? I mean, and you look at how much they're importing, and if it's not a lot, it means they're going to have a slowdown.
Yeah, I mean, the base metals is just not a place we want to be. That's one of the worst places in the world, without a doubt. I don't think that has changed. And like I said, any bounces we get, I think are going to be counter-trend.
From commodities to cash, is cash the place to be? Bond funds are loading up on cash, with average cash now more than doubling in the funds out there than we saw last year. Should you follow suit? Greg, what's behind this move into going into cash?
Well, it's interesting. Bond fund managers are more nervous than stock fund managers about the Fed raising interest rates next year, so that's part of it. And also part of it is just who wants to be buying bonds with interest rates so low? It's not even high yield anymore. It's moderate yield. So some of them are parking money in cash, waiting for the next downturn in the market.
Should people watching follow? I mean, the 10-year has done very well if you bought the 10-year.
Yeah, listen, I don't give advice, but do you want to be buying bonds here? It seems sort of problematic.
Okay, we have JC nodding.
Yeah, I couldn't disagree more. I mean, who wants to buy bonds? Clearly, the entire world does. It's one of the best asset classes on earth year to date. Interest rates are going to continue to stay down. You can listen to Wall Street economists that have gotten it dead wrong all year long, or you can listen to the Fed Fund futures that have nailed this trade since the beginning. They continue to suggest that interest rates are going to stay down. I don't think rates are going anywhere. You got to keep buying bonds. Absolutely.
Well, yeah, but these guys are going into cash, Adam. I mean, these bond funds are missing the trade almost.
And it's possible they're making a big mistake, as he just pointed out, because if they're in cash because they're worried about a liquidity crunch going into next year because of interest rates going up. I mean, Wall Street Journal today had the article about behind the doors at the Fed. They're actually discussing about they can't get inflation to the 2% target. Why would they raise interest rates if they can't get inflation where they want it?
But Greg, why not just own stocks that are good quality companies with good paying dividends? I mean, forget this whole bond discussion.
Yeah, no, there's an argument. The downside, the problem with that is some of these are kind of expensive. You look at a company like Coke, you know, they're paying nice dividends, some of these companies, but they've run up a lot. So relative to earnings, they're more expensive than they used to be. That's the argument against doing that.
What do you think, JC?
I think on a relative basis, you have to continue to buy the stocks with the highest dividends. I don't think Coca-Cola is necessarily in that group. I would look more into the utilities, real estate investment trusts. Those are the best sectors year to date, and there's a good reason for that. Bond investors looking for yield aren't getting it in the bond market, so they have to go to the stock market. I think on a relative basis, you have continued to put money in that space.
And real estate investment trusts pay great dividends.
Yep.